the quarter itself was not much to write home about, but it is that guidance, Karen, and the notion that, you know, if the street was expecting 180% growth in RPO's remaining performance obligations and it came in at 359, that's a magnitude higher. Yeah.
Yes, it's staggering. And so we were talking a little bit before the show about, OK, this is a stratospheric number. And what you could put out half a stratosphere and still really, you know, have something extraordinary to report. So you must feel extremely confident in reaching that stratospheric number. I mean, it really is kind of stunning that we're, I don't know, what inning, 2, 3 maybe, but to have this, you know, monumental shift. So what is the profitability going to be? We don't know that. So that's an open question. But I mean, this is just stunning. I don't know how else to think about it. Extraordinarily huge. We'll see how much actually comes to pass, but they sound like for the next few years, this is what they expect the revenue growth to be.
Yeah, and I think that the next few years is what makes this so extraordinary. 359 growth on the RPOs is great and crazy, and we've heard some analysts, you know, wax as if this is the craziest day they've ever seen. I would just put it as, if you have that kind of visibility of almost 70% CAGR out to fiscal 30, that to me is astounding. That to me is where this is a number that at least imputes into a number of other companies out there that must be seeing the same thing. And while I would argue that Oracle has tended to have a few more pom-poms in their releases than other companies, and they really have, I think it's very difficult to dispute the energy and the momentum and the transformation in their business, which we've talked about, which is very much seeking a wider revenue base, maybe at less margin. This is very impressive. Op margins right now, 41.5. Let's see where they go. The fact that they are also in a place where they will actually have Google Gemini on their cloud infrastructure, the fact that they are now competing in the same space as some of the other trillion-dollar companies means it feels like this is a company that wants to get there.
Yeah, clearly what you're saying is the AI demand is there. I mean, when you see this kind of backlog increase, like, people are still spending on AI. And I think something you do want to maybe watch for here is the CapEx, right? I mean, they went from about under $2 billion of CapEx in 2020 to over $21 billion last year. That's presumably going up when you have this kind of a backlog. And I think that's the question when you look at these companies is clearly the markets don't care about these high CapEx numbers. They don't care that valuations are much higher than their longer term averages, but at some point they probably will. So I think in the short term, these kind of numbers are absolutely going to bring the stock higher. But I do think that's something you want to watch in the space as we move forward.
I mean, it's just amazing that yesterday's narrative was, is AI adoption slowing? And then here we are today. We've got this huge, massive number, a forecast into the future, which really reaffirms the notion that AI spend is here to stay, at least for the next 5 years.
Yeah, I mean, I think it's, we were joking before, it's classic AI earnings report, right? Miss earnings, miss revenues, guide up, and the stock explodes higher. I also think it kind of continues this recent trend out of semis into other parts of the AI trade, right? And, you know, this type of result, I think, is just going to kind of further that momentum into the software space and obviously into power generation as well.
I mean, where the stock has come also is staggering if you consider that at the beginning of, you know, since June, the stock is up 40%. So it's not like it hasn't had a run into this quarter. It has had that run into the quarter. And yet here we are still, investors bidding it higher. I
mean, there will probably be some analysts who argue, and it might be right, the stock is better here today than it was yesterday at this price. It's hard for me to buy something up that much. I mean, it's not a short squeeze. There's like a tiny short interest here. That's not, I mean, it's just wild bullishness. Well, and if you look at like a core weave, right, you could see how, I mean, that's up 5 or 6% in the after hours.
Right. But I mean, 27.5%, it's just an extraordinary percent for such a big company to move in a single session.
I don't think Oracle is over-owned when you look at least how people have sought to get their exposure across AI and tech and semiconductors. And as Stuart said, this is part of a rotation. We talked about this. We talked about this with Broadcom. We've talked about that we are seeing some rotation in the space. It doesn't necessarily mean that it's less exciting for the folks we were talking about yesterday. It just means that there are more people. And again, if you asked a lot of retail investors, and I would say even a few handful of institutionals, the names they were going to not be caught underweight were going to be the obvious ones. Oracle wasn't in that basket. Let's be clear. And now getting up near, I don't know, what's the market cap here? North of 400 billion?
800 billion.
I mean, 800 billion, excuse me. So this is a case where this company now is not only a must-own, but it's a case where in the last even, call it 15 months, this market cap has tripled. And that's something that I think a lot of people don't have exposure to.